Hi traders, Jeff here again with another video on the peaks and valleys trading system. We should really call it just a trading package because it's becoming much more versatile than just your average run-of-the-mill system. What you're looking at on screen right now is a Renko chart, obviously. This one is for gold, just simply because it's the first one that's up. I have a couple of others I want to show you. Wish I could say this was all my doing, but it actually comes from my buddy Will, who's been trading with us for a while, and he has been trying to sort of simplify everything and get it to the point where there are obvious signals and I guess you say some narrow it down to some of the more high probability signals. And he's pulled it off. At least in my opinion, you can decide for yourself. Now, understand that this involves kind of a different way of setting up the indicators. It also involves a new indicator. You may notice the line running here. This is the Renko signal indicator. It was part of a package from another program we put together about 3 years ago or so. And I'm dragging it into this one and using it. I'll explain it in a second. What we're using it for. But what he did was he took the Renko Signal AM and loaded it into the same indicator window as a Stoke and removed one of the two lines, since the lines basically run in concert with each other. You only needed one. And his theory is when both were oversold, which would be down here at the bottom, or overbought, which would be above the top. In other words, above the 80 or below the 20 line. When both of them cross at the same time or very close to the same time, this is when the highest probability trades set up. Doesn't mean they're the biggest, doesn't mean you're going to make the most pips, but basically when this happens, price moves in the proper direction 95% of the time. You'll be able to, and you'll go through this, you're going to see that's not just much of hype. I mean, this thing is really, really, really effective in terms of spotting, some of the price moves. Now, like I said, it doesn't give you the biggest moves necessarily, but at least you're moving into profit. And that was the reason for adding the Renko Signal AM. We are not using this for a signal to get in. We are using it as a signal to get out. Okay. And this is a great example of why we want to do that. You notice right here, both lines kind of merged at the 20. I'll put the crosshairs on so it's easier to see. Both lines merged at the 20. You get in. This is moving in the right direction. You can see the green line for the signal AM line, or the signal line rather. It's moving in the right direction. So you got the signal to get in. You got in. You moved up. You got some pips in your direction. This is a $1 gold chart, so it moved about $3 in your favor. But you can see that it reversed and came back. And then you got the change of color on the signal, Renko signal line is telling you to sell. That's when you get out. Now, when you got out, what happened? You got out basically at break even, no loss. That's nice. Going backwards, there are so few trades where basically you got a signal and then it immediately reversed. You're going to be hard pressed to find any. Now, I'm not saying it'll never happen. I'm not saying it hasn't happened. I'm just saying it doesn't happen very often. Normally, you end up getting trades in the right direction. So, what you're looking for is for the two lines to essentially be together or very close together. This is very close together. These are essentially merged. These are essentially merged. These are essentially merged right here. So you can see, like trading gold on would have been Friday after about 8:30 in the morning. You had 1, 2, 3, 4. You had 5 trades. 4 of them moved significantly into profit, and one of them was essentially break even. That's a pretty good day trading gold. If you can be here for the morning session, and trade it. That'll essentially trade it all day. I'm going to pause this for a second. I'm going to bring up another chart and show you an instance where you don't quite get the lines together, but it's close enough, because it's you're not going to see them this close every time. Sometimes there is a little bit of a gap. I'm going to show you how to analyze which ones you should be taking and which ones you should be passing. So give me a second to set the chart up. I'll be right back. Okay, we're back looking at the US30 chart, and I want you to take a look up here at the top of the Renko box is the top of the chart right here. If you look down, you'll notice that you got the first crossing line, which would have been about the signal AM, which happened right about in here somewhere. Okay. Um, in fact, really, it started to approach here, and then when the new box opened, you were crossing essentially, but price moved up, right? Which caused the Renko Stoke to sort of delay the crossover until it got to about right here, moving down onto this particular candle right here. Now that's what, 1, 2, 3, 4, 5, 6 boxes later. Normally, 6 boxes away would be an instant disqualifier. In other words, if looking down here, you had an entry, on this candle, but then you didn't get your entry on the other one until up here somewhere. That's 4 or 5 boxes away, right? This would be 6 boxes away. Too far away. You want the crosses. You want the crosses to occur within a couple of boxes maximum. It's never really going to be consistently on the same box. Every once in a while, you'll get the merger of the lines, like right here. Basically, they merge at the same time for the buy trade. Okay, that's great. But here you got some separation. So 5 or 6 boxes. That's usually too much. But it's only usually too much if it's in the direction of the trade. In other words, if you got the first cross happened, up here where the crosshairs are out on the top, but then the second one happened down here. Okay, too far away. It's maybe it'll still move into profit, but it's a lower risk. It's our higher risk, lower reward trade is what that is. But here, you only got 1 or 2 boxes in the direction of the trade before it finally the signal finally caught up with price action. That would be a legitimate entry, because you're even though there's some chop, I guess you'd call it, in the interim. Eventually, the signal did start moving in the right direction. Everything got in line, and you were good to go. So pay attention to where the two different lines indicate an entry. I mean, if you're only within a couple of boxes away, good entry. If you're 5, I would probably at a maximum let it go 3 boxes at an absolute maximum. 4 and beyond, again, a high risk, low reward. What we're trying to do is we're trying to just get those signals that are saying, hey, these are the best signals you should be taking. And so that's one of the signals right there. There was another one back here. Wait a second, see if I can find what. Actually, it was the same. It was the same, essentially the same signal. So, or the same kind of set. I think was this right here. No, this wasn't it. Actually, it was it, because you got your signal came in about right here on the Renko signal AM, and you got the other one right here. So this was the gap of 3 that I was looking for right here. It looked pretty good, like it was crossing, but as soon as the price started moving down again, it leveled off the signal in. But you notice that the Stoke stayed well below the line right here. So your Stoke is still, even though this one's getting close, this is nowhere close to crossing, and didn't cross again until about right there. So sometimes you get a wide enough gap. It looks sort of bad on the charts, but when you look at the number of boxes involved, not that bad. 3 boxes maximum, and you still can take the trade. Then again, as soon as you've seen the signal AM start changing color, you get out, and you maximize your pip gain, your box gain, point gain, whatever you want to call it at that time. For anybody that's trying to do the 100 points a day, this is fantastic. I mean, this gives you that chance to sit there and just snipe away at the best of the best trades. Pick up 25, 30, 35 points per trade. If you're using autoscaler, this is a great chance to take one autoscaler trade and knock your 100 points out in one trade. Or maybe more than 100 points. If you can catch a nice long one. Again, you're going to see the temptation, the urge is to take the signal line, ignore everything that's happening in the window down here, and probably just take the signal line trades. And sometimes that will work for you. But it can get very choppy when you get to these parts right here where there's sort of an intermediate, maybe not intermediate, but a delay. There has been a slight trend set up. Now you're in sort of a consolidation period. You're starting to get opposite direction signals. You start taking those, you're going to get chopped up. Okay, trust me, it doesn't take long to get chopped up on one of these. And suddenly, where you've been up 6 or 7 on a previous trade, now you've given it all back plus some on 2 or 3 trades going in the opposite directions that never panned out. Ignore this for entries. Okay, just ignore it. Just stick with the crossing of the two lines, moving up over the 20 for your buys and moving down through the 80s for your sells. Two lines preferably right on top of each other. Use this signal change color to get out. But wait for it to lock in. One box will basically, you can see where you get sort of a half sell, half buy signal on one box. You want that second box to close to lock the signal in, to take it as an exit signal, because sometimes you will get one box, it'll go halfway, but then price will then resume your trend. That will disappear. It will look just like one nice long line after that. So pay attention to the line. Make sure it locks in and before you jump to get out. But guys, it does not get any easier than this. Go back to the download page. There's going to be a new template in there. I'm calling this one the Renko Patience template, because you need the patience to wait for the two lines to cross, which means you're not taking the trades where they're not crossing. You're not taking trades that set up in the middle of the line there. Chart doesn't want to seem to move for some reason. Okay, well anyway, you don't like right here, this is below the 80 line where the cross took place. You're not taking those trades. Okay, you're only taking the ones that are forming above the 80 moving down, or below the 20 and moving up. Those are the only signals you're going to take on this. So there is a template. All you have to do is load the template onto the chart. It will set this up for you. I have included the Renko signal in the package now. It can be downloaded. It's in the it is only in the MT4 package right now. We don't have the MT5 version for it yet. I got my guy working on that. We'll have that in a few days. So it's just the MT4. There we go. Now we're back. I think that's about it. So anyway, if you have any questions, if you're in the Facebook group, drop them in the questions below this video. And if you need to ask me anything, personally, just send it to me at jeffglenellis@gmail.com. I'll add that down here at the bottom somewhere where you can see it typed out in the editing process before we get. But that's it. Hope you can use this to start cranking out some massive trades and some massive wins and some daily wins, and start to hitting your goals. Anyway, anything else comes up, let me know, and I'll talk to you guys soon on the next video. Bye.